With the economy struggling through high inflation and rising interest rates, we can expect that numerous investors will have been badly affected. In order to enjoy a comfortable financial future, investing is paramount for most people. Just as the COVID-19 pandemic demonstrated itself in different continents of the world, a seemingly stable economy can be quickly turned on its head, leaving those who weren't prepared for even harsh times scrambling for income. This is why it's essential to have a very great investment strategy. While we know that investing can build wealth, there is also the need to balance potential gains with the risk involved. This means you will need adequate emergency fund and be able to ride out the ups and downs of the market without having access to your money. But what can be the best investment opportunity of your lifetime? Well, that's what we're here to show you. In this video, we will look at some of the investment opportunities that can help you even during this economic crash. So, watch this video to the end because it's going to be very interesting. Also, remember to subscribe to our channel and click on the notification icon so you can stay updated with our videos. So, without wasting any more time, let's get straight to business. Over the past decade, it was not difficult to generate wealth because the economy was going well. It was really a good time for businesses and investors to make more money. Businesses' expanded valuations continued to grow. However, the pandemic made everything worse as it threw the world into chaos. The number of businesses that have collapsed cannot even be counted. The financial market is no longer improving, and the investing world is currently not favorable. We know that a lot has happened so far, and of course, a lot is still going to happen. But despite all these, this could still be the best time of your life to get ahead and build your wealth. Yeah, we have worldwide investors like Warren Buffett and Charlie Munger who have great investment strategies that one can utilize. So, this may be a big opportunity for you as well, and you can use it to your advantage. One thing we have to pave the way in the period is not to try to buy stocks. Even if you must, you should make sure you purchase the one with potential and at a very low price. Do not make the mistake of owning stocks, especially at a high price. You may just get too upset with price fluctuations. There's a lot of psychology in investing and a lot more than people realize. No one should tell you that the idea of investing is to buy at a lower price and sell at a higher price. However, it's not always the case because you can never tell what happens next after you make a purchase. In fact, most people do just the exact opposite, which means they buy high and then sell low. This doesn't mean they intentionally decide to do that. The fear of it going even lower is what makes them always sell. They often find themselves in a tough situation, the uncertainty and doubt of it going high again. And when this happens, it definitely scares them out of the market. This is not the case with great investors like Charlie Munger and Warren Buffett. What these investors would say is, the best time to invest is when the market is down heavily. Also, according to Charlie, a very good investment opportunity is acquiring equities that are highly profitable. As he advises investors to do in this normal economic situation, he also advises them to do the same even during a recession. He did the same thing by first buying equity shares of profitable businesses. So, when you own a business equity, you also own a financial interest in such a company. What that means to investors is that they're also part of the shareholders of the company. If a company were to close and pay off its debt, a shareholder's equity is the money it would collect. So, owning stock in a company gives shareholders the potential for capital gains and dividends. Also, if you're an investor and you're looking for a fixed income security with potentially higher yields, and then you're willing to take on a bit more risk in return, you may decide to go for corporate bonds. In corporate bonds, the higher the likelihood a company will go out of business, the higher the profit. Corporate bonds operate in the same way as government bonds do. The only difference is that you're making a loan to a company, not a government. Being a business owner during this period really gives you a lot of investment opportunities. Charlie Munger emphasized that being a business owner will be highly profitable. You should try to focus on what people really need. Even if the recession hits really hard, it can't get you if you have your own business. As an investor or a potential investor, you should always have the courage to start your business. It's always part of the dream. Despite the high financial risk, it always comes with a great reward when you run your own business because it gives you a higher chance to make more money, even when there is a global economic crisis. You will be your own boss and you can't get fired. Why? Because it's your business. You will always have the opportunity to make greater decisions that are essential to your business. That being said, one major thing we need to think about is why businesses are suffering. As we speak, the main problems are high inflation and rising interest rates. What this means is that costs will get higher, debt will be more expensive to service, and consumers will have to spend less. One thing you need to do as a business owner is to be confident that your business will be able to cope through an environment like that. And how can you make sure that happens? Firstly, the business you're looking at should have price-passing power. Pricing power means they've achieved a competitive position where they can raise prices and suffer no drop in sales. There are numerous businesses that cut back their prices all because consumers tend to spend less on discretionary items. However, top businesses have such strong competitive advantages and they're able to raise prices without suffering a large drop in sales. Also, in everything you do and in any investment you want to embark on, always know what you're investing in so as not to lose your money. So, it will be a silly thing to make a blind investment. Do not fall for any hype, no matter how they sell it to you. Also, like Charlie Munger always says, it's very important to set long-term goals. There's no point in investing all because you want to see an instant gain. And it's a very good thing to invest with a multi-decade horizon rather than seeing quick earnings. One thing to put into consideration is the kind of business model you want to embark on. Ask yourself if the business model will hold up well in turbulent economic times. Not every business has the tendency to keep blooming, especially when there is a crash in the economy. For example, grocery stores typically outshine some other businesses during recessions because it is obvious that people will always buy the essentials. How about real estate or insurance? Surely people won't stop paying for a house or a car insurance no matter what the economy says. So, there are many factors to consider. However, if you're an active investor, you should always stay strong because the market fluctuates day in and day out. Finally, spreading your money across different types of investments can help smooth out your investment returns. The more calculated risk you're willing to take, the higher the potential long-term payoff. And that's it for today, guys. If you enjoyed this video, do ensure to give this video a thumbs up, tap on that awesome subscribe button, and jingle that notification bell so you'll stay updated with our interesting videos. Thanks for watching. See you in the next video.